Welcome back everybody to Altcoin Daily. Make sure you watch the entire video today or risk being at a disadvantage, because what I'm about to show you are multiple current examples as to why I think that Bitcoin will continue to increase in value over the next several years. If you do not hold any Bitcoin today, you are simply at a disadvantage right now, because there's this monetary revolution that's going on right now, and the only thing that you need to do to be a part of this is to own Bitcoin, because Bitcoin is a peaceful way to opt out of the current financial system. And the reason why you would want to opt out of the current financial system can best be illustrated by our top 3 news stories today. Number 1, the Federal Reserve, as of March 26, 2020, is changing its policy to be that all depository institutions, like banks, now have a 0% reserve requirement. It was 10%, now it's 0%. What this means to you is, if you go into a bank and you deposit $100 into a bank, that bank, it used to have to keep at least $10 on hand. Now it doesn't have to keep any of the deposits on hand for you to withdraw. They can loan the entire $100 out to another bank. So this is going into effect. Number 2, the FDIC, the government agency that insures the money that you put into the bank, they've just put out a video press release directly to you, discouraging you from taking control of your money. It's discouraging you from taking your own money out of the bank. So this is what they said.
We're living in unprecedented time. At a time of a pandemic like this, it is way too easy to get confused and to have fear about what you should be doing with your money in your accounts, especially as you're looking at the volatility in the stock market and the financial sector. This is what I would like you to take away from this. Your money is safe at the banks. The last thing you should be doing is pulling your money out of the banks now, thinking that it's going to be safer someplace else. You don't want to be walking around with large wads of cash, and you certainly don't want to be hoarding cash in your mattress. It didn't pan out well for so many people. And I will tell you this, no depositor has lost a penny of their insured deposits since 1933, when the FDIC was created. So if you're talking about having your money in a safe place, please keep it in an FDIC-insured bank.
So, just to recap, number 1 is that banks are no longer required to hold your money in the bank. Number 2, the government agency who insures your money at the bank, they're discouraging you from taking control of it. And now let's go to number 3. The National Economic Council Director, Larry Kudlow, has just put a number on America's pandemic relief package. They are printing $6 trillion. This is the largest financial package in the history of the United States. This is a record.
So the total package here comes to roughly $6 trillion, $2 trillion direct assistance, roughly $4 trillion in Federal Reserve lending power. Again, it'll be the largest Main Street financial package in the history of the United States. Liquidity and cash for families, small business, individuals, unemployed, to keep this thing going. We're heading for a rough period, but it's only going to be weeks, we think. Weeks, months, not going to be years, that's for sure. And hopefully pave the way for continued economic recovery after this crisis departs. Thank you, sir. Thank you.
So I would think that in the coming years, more and more people are going to choose to opt in to Bitcoin, because we're in a very unique time right now. This is a very unique time where A, most people don't know that Bitcoin is still around and has been around for 11 years. B, most people don't know Bitcoin's primary value proposition. And C, the people who do know about Bitcoin can't articulate properly what Bitcoin's value proposition actually is. So if you know this stuff and if you hold Bitcoin today, you are positioning yourself very well in the future. And to go further, I want to read you another guy's opinion as to why he thinks that what the Fed is doing right now is very bullish for Bitcoin. The reason Bitcoin's value may rise is because the Federal Reserve is doing exactly what it did in 2008, except on steroids. And Bitcoin was created right after 2008 as a hedge against it. So why wouldn't Bitcoin be seen as valuable? He gets into a little bit more detail. Let's give you the backstory first. So as I'm sure you know, during the crisis of 2008, the Federal Reserve of the United States of America printed $2 trillion. This used to be a lot of money, in order to prevent a global credit bubble. In 2008, the Fed held almost $1 trillion in assets, but by the time they had printed the money, their capacity rocketed by $3 trillion. Again, used to be a lot of money. Bitcoin was introduced the next year, following which the cryptocurrency market we know today came into being. Back then, the Federal Reserve printed that money and invested in new treasury bonds, with which the government conducted sales of these bonds every month to make up for its deficit. They termed such an action quantitative easing, and we're doing that again today. A similar situation may be coming to the fore today. After the massive collapse of the stock market this year, the 12th of March, the Federal Reserve's latest efforts to save Wall Street put it in a position to bring out the blueprints of 2008. On the day of the collapse, the Fed announced that it will be utilizing the repo market again. A repo, or repurchased agreement, is a form of short-term borrowing, mainly in government securities, where organizations, those who already own a lot of securities, are allowed to borrow money at cheap rates. According to a statement from the Federal Reserve, it will be offering a series of 500 billion terms in repos till April 13th, an amount close to $4 trillion. And we know we have the $6 trillion relief package. So the question is, what will be the impact on crypto with such aggressive printing? Whenever the financial system goes south, the central banks print money. However, as people move towards the US dollar, the printing of such an enormous amount of cash depreciates its value, and we may see more and more people moving into crypto rather than fiat. So after the first printing cycle from 2008 to 2013, it was claimed that around $145 billion in capital found its way to other assets like Bitcoin, like Ethereum. That is a significant amount considering digital assets weren't really mainstream back then, and it didn't get as much attention as they do now. However, we are entering a different phase altogether at the moment. The amount of capital moving into crypto assets during this printing cycle can be significantly more than the last. I mean, the last one saw $145 billion, and people didn't even know about Bitcoin from 2008 to 2013. People know about Bitcoin now. So since the last printing cycle, the digital currency market has slowly solidified its position in the financial ecosystem, and it goes on to basically say that the infrastructure that is around today is leagues better than back then. So there's just so much more on-ramps. The awareness is so much more. You get the picture. And for our final story of the day, the CFTC has just defined what actual delivery of cryptocurrency should look like. Let's read a few details and we'll talk about why this matters. The U.S. Commodities Future Trading Commission, the CFTC, has published its final guidance on actual delivery for digital assets Tuesday, seemingly settling a long-standing question on whether a cryptocurrency can be delivered from one party to another. The CFTC shared a 35-page document stating that, in its view, actual delivery occurs when a customer has complete control over the asset and the offerer no longer has any control over the asset by the end of the 28 days after the transaction. The publication comes following several years of public input from exchanges and other stakeholders, and it goes on and it shares the whole 35-page document. Basically, what this means for you is not a lot, but what this means for your bags and the industry is a lot, because this is clear clarification, regulations coming from the CFTC. I liked what Cointelegraph said. They said continued clarity from the CFTC shows the prevalence of digital asset trading in the mainstream world, spurring responsive regulatory guidance. So really what this is are green flags clarity for people who are more used to the traditional financial space, and just another green flag that tells them, this thing probably isn't going anywhere. Doesn't seem like they're going to ban it because they're regulating it. I guess let me figure this out. Look, I could talk your ear off about this all day, but we're going to stop for now. Make sure you're subscribed to the channel because we're going to continue this discussion at a later date. If you got value in this video or you want to support the channel, hit the like button right now, and I'll see you tomorrow.